Welcome back to your home of hopium-free crypto and economic market cycle updates. The titles are the punchline, the content is what you stay for. So with that in mind, do the good things down below, likes and subscribes. I hate asking, you hate hearing it, so let's just do it and get it over and done with. And today's video is looking at the massive trap on Bitcoin and cryptocurrencies. Now, it's not a clickbait title, it's not FUD, it is just looking at the data of the time analysis on Bitcoin and of course leading over into cryptocurrencies. So not clickbait, not FUD, let's look at the time analysis. Before I dive into that, just wanted to say a quick shout out to guys who are in Athens, Greeks, internationals, Australians. There's a lot of them over here. Every second accent I hear is Australian. Check us out, Sunday, 7th of August, a few more days time. We're going to do a chat about Bitcoin, crypto, real estate cycles. I've been doing a little bit of research over here in terms of property and just how that works. So I want to have a chat and I want you guys to come along, check out the link. I'll leave it in the video description if you're in town, you want to come by and have a discussion. All right, so enough on that. And basically, I want to know where you are listening to this from. What do you do for work? Because a quarter of you listen to these while you're at work, the rest of you are on the toilet or eating and drinking. So something's going in or going out. All right, it's a bit of fun at the beginning because this is not a clickbait title. We're getting right into it. Wall of worry is something that I've talked about many times on the channel before. I don't hear this too many other places. The point of the wall of worry is when you're in a macro bull market. So we've got to do two different things here. Macro bull, small term is the micro. So in the micro, obviously things chop around a fair bit. I'll get to that as well in terms of what I think will happen for Bitcoin. And then we're just looking at the macro picture here, the wall of worry. So wall of worry is the financial market's periodic tendency to surmount a host of negative factors and keep ascending. Basically, bad news, market go up. What have we seen recently? The interest rates have risen, bad news, market go up. All right, so this is all part of the wall of worry. Along with a few other notes here, markets always read through the Fed statements, so we see that quite a lot, and basically they price in the news. My next thing here is, yet news headlines seem to be taken at face value by retail. So there's a lot that goes on with the news and what happens in terms of the price. People often just take the news headlines as face value. We've seen Ukraine, the war go on, things are getting bad, it has to come to a World War III, etc., etc. But then you don't hear about the other pieces of the news, like the exports have begun again, and all they want you to hear is that it's going to be global hunger and the world's going to go down. This is just what's stated in the news articles, and then of course I have to give my own opinion about what I think is going to happen because this is how I'm trading and investing in the markets. So we hear bad news, people think bad stuff has to happen for a long time. That's not how I see things happening. The markets have actually started, well, Ukraine has actually started to get some corn and grains out to the market. We're looking at the macro scale here. And this sort of news just goes unread, unseen, untalked about. There's always something else bigger to talk about that's more fearful because this is not the fear-driven news. So this is going to keep happening. Basically, the grains are getting out there, and essentially, if this was to happen, things were to get bad again, and they can't get food out and people start to starve, this is the exporters that Ukraine basically exports to, the countries. Egypt, Indonesia, Bangladesh, Turkey, Yemen, Philippines. Like, these are the top Ukraine wheat importers, people who are buying this stuff from the Ukraine. So last I remember, none of these countries really run the world. The people who run the world are the US and China. That's it. That's just looking at the top GDPs. And they are top GDPs by a very long way. Of course, Japan's up there, Germany, India. Again, not my opinion. This is what actually happens out there. United States and China, they're running the world. So this is not affecting the US or China as much as we're all led to believe as the peasants that we are, listening to these news headlines, going on what the EU's telling us and whoever else is trying to run the world here. But really, what's happening in the US and China, they're not running out of food. Sure, inflation is going up and food is getting more expensive there. We've gone through those discussions, but we're just looking at this in terms of investors, not getting emotionally driven into this. So essentially what I'm getting at here is the wall of worry for one. We've looked at that before. The news that is now starting to come out, which is not getting flooded out there across the markets, basically things are returning. This takes time. Yes, there are still people feeling the effects. Yes, there's inflation, etc., etc. I know we have to talk about that every single video because people often get triggered and they don't like the video. So just balance those out, smash the likes as well. Any engagement really, that's what we're after here. And so this is what's happening in the rest of the world, and that's why I'm still seeing the economy going up. The property cycle will continue to go up, and that leads us into that peak of 2026. So that is the big bullish hopium I've got for the macro picture, because yes, I have thrown in the title of the warning, the massive price trap, because this is what comes next in terms of the macro picture. We are racing towards the downtrend line. We are racing towards breaking the downtrend, but we have to have a look at how that happens and what happens after that. It's a macro picture, it'll take weeks to months, and I'll look at that in terms of exact timing on Bitcoin, but I just wanted to give an update on the S&P 500, which is the world leading market here. This is the only one that really matters, broadly speaking. Remember what we have covered here. No one else has been covering this. Yeah, I'm throwing that in there. No one else. We are looking at the overbalance of price to give us a signal that things are turning. It doesn't mean that it's flipped overnight from bear to bull, but we're looking for a signal here. This is data that's been tested over 120 years. This is something that's come from GAN. So this is 120 years of data. Looking at the overbalance of price within the downtrend, okay? So look at this swing here, just briefly. Yes, this is 11.5%. We're now at nearly 12% of a rise here on the weekly chart. Remember, we want to look at something just a little bit bigger than the hours and the days. We got 1, 2, 3 weeks up. If I throw these candles on, you can see it just with a little bit more color. 1, 2, 3. And we are now in our 1, 2, third week up as well on the S&P within this downtrend, okay? But the main thing I want to get here is the number of points. We're up 446 points from this swing, and we're waiting to get to about 479.5 points. So call it 480 for a round number. We're not too far off that now, and we looked at this a week or two ago, and I drew in this exact move here. This is that yellow line to the up, and we're nearly there to that peak. So if I move this, you'll see what I'm talking about. That's the target. We're now at a double top on the weekly chart, so potentially we are going to see a reversal, because like we looked at in previous videos this week, approximately that 3 weeks up is where we tend to see the market go on a bit of a reversal before it potentially does another move up, okay? So it doesn't mean we're going to go straight up, but we're coming towards that timing point where the market may have a reversal and go up. But we really want to see this just push past and get to another 40 or so points to then take out this level. That is a very early sign that we are turning the tides yet again. So just adding to that checklist of going from bear to bull, you have a checklist of things. It just doesn't happen overnight. It takes time. So that's another thing to the checklist, when and if it does. It will happen. It's just a matter of when it will happen. So is it this time or is it next time? Okay, that's what we're keeping an eye on for the S&P. That goes along with the wall of worry. For me, macro bull. It's part of the hopium for the macro picture. Now let's have a look at Bitcoin. Looking at this potential big crypto massive Bitcoin trap warning that no one's looking at. So we're running towards this downtrend line. So S&P has it. It happens on all markets all the time. This is just another example of it. So here's the downtrend. See this blue line? Let's start with the first one here. You can see the market has downtrend, and then eventually it breaks through. And I'm on a weekly chart here. So if I bring out the candle so you can get the nice feel for the volume of the candle, look at this green bar. So we've connected the downtrend top to the next lower swing top, and the market breaks through on high volume. Remember, it's a weekly chart here, and it peaks out and then runs back down to test the upper side of that downtrend. So it happens time and time again. There are times where it won't happen, but majority of the time, this is what we tend to see. All right, so it's broken out and then runs down again. So this is the trap that I'm looking for here, where the market starts to go on a climb, which is what we're seeing on Bitcoin right now, and then we get the breakout, and everyone gets really excited, thinking that they've missed out on dollar cost averaging. You are all wrong, bears. I should have bought earlier, etc., etc. But the patience, this is the patience game that has to come in, and then you see the market fall. Remember, this is a weekly chart. There's a lot that goes on from this peak. The next week is basically up again, and most people won't realize that the market hasn't really moved that far. In this case, 0.7% for the first range here in 2014. You got another peak here, it's down 2%, but you're still feeling like there's a lot of energy, and then all of a sudden it rolls over, and it takes weeks and weeks before it takes out that low. So I'm looking for the low of this bar to be taken out, which is right there. That's a gotcha bar, meaning people are sucked into their positions that they've been buying over the last 10 weeks of a dollar cost averaging position, and then bam, down she goes. and people are just trying to scramble out of their positions. You can see the volume increased, it increased again, and down, 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 down. I'm not saying this is going to happen for Bitcoin, even though I'm looking at the Bitcoin chart. Remember, Bitcoin was a very different beast back in 2014 and 2015, more like an altcoin. Whereas now I think this is what we'll see for cryptos, but Bitcoin might hold up a little bit stronger. Okay, so that's something that we've been talking about for months and months and months here on the channel. So potentially that's the trap that I'm looking for here for cryptocurrencies. But you want to know how long will this take? Well, I've got a couple of numbers here. I'm just looking back on history, just measuring out these events. So I'm just going from the peak to the breakout point, 25 bars, 25 weeks. This is the bar that I'm using as the test to the upper side of the downtrend. That was about 59 weeks. So just over a course of a year. So about a year and 2 or so months. Okay. So then I've got the next downtrend. So the market then has to move towards the next downtrend. That's the peak there. There's the breakout in October. And then I'm just using one of these days here as the test. There's not really a test because the market did move on from there, but you can see that there was an accumulation range. And so if I'm looking for the breakout bar, you can see the volume has increased compared to the previous several bars, candles, whatever, it doesn't matter. That's the breakout, higher volume, okay? So in terms of a measure, let's go to that point, and that is 98. 111 takes us to about this bar here. That's pretty much the final dump low before the market took off. So 98 is where the breakout occurred on that second test. There is a lot of time in between these plays. That's what I'm getting at here. And the trap that I know most will fall into, because it'll show up on the chart, especially in the volume and the prices move and the excitement and the market sentiment, which we've looked at many times. Unfortunately, it will happen again. So just be aware of it. Let's keep account of what's going on. So doing it again, downtrend. You can see the first breakout here, volume increased. I'm pointing at my screen. That's where I'm looking at for the volume. 31 bars, 31 weeks. Where did it retest? 52 bars. And then the market moved away again, doing another measure. And the breakout and the retests happened a lot quicker this time. And like you could see on the previous one, it broke out and then didn't really test. So the second time it happens is really like, if you're not in yet, that's kind of like your final boarding call before the market really starts to take off. So you have a fair bit of time to get set. We haven't seen that first real break yet, but there is a fair bit of time, and that accumulation zone can be quite wide, as it shows here, from 3,000 to 14,000, and then the retests and the break again. This is going to happen over time, is my belief, because it's happened so many times before. Let's have a look at where that sits us. We're not even at the first break yet. We could say that we have seen the first break by looking at the downtrend to this higher top, and the market broke. You can see that it sort of broke in this zone, but it's really unclear at that point, and then it's retested the upper side. In that case, it's very, very short in terms of the time frame. So the peak to really, I mean, that's the break there at 13, and then the retest at 31. So it doesn't really line up with a lot of the timing of how long these positions tend to take. Remember, we can be wrong, but it hasn't shown that in history so far. So in that case, we're just going to use some of these timings from the previous moves. You can see that these two were quite similar, 25 to 59, 31 to 52, and then the next one takes a little longer, you know, that's sort of 100 to 150 weeks. So that's 2 years to 3 years total before the market really takes off. So in terms of a measure, top to 52. So remember, that was the second one here, where it tested the upper side of the downtrend. What we're trying to do here is break to the upside, then test the break the downtrend, and then test the upper side of the downtrend. You got 52 and 59. Where does that leave us? Well, comes out at 52 weeks would be the first week of November, of course, because that was the top. So 52 weeks being 1 year from the top. So that's the first one. And the second one is 59, which brings us out at around Christmas time, December 26th, so the week beginning there. So what needs to happen for this market to actually get to the upper side? This is the hopium, and the trap on the hopium is we'd have to see the market break above the downtrend and then come back and test the upper side of that. Does it happen this month, next month, or does it sort of trend sideways, then break above and test the upper side? You know, it can look many different ways, but the main thing is, I think that will be the trap wherever that occurs, whether it's like that, whether it's like that. The break above the downtrend is basically the trap because people get sucked into trying to buy on that first push out. You can see it's happened each time. There's a lot of interest as the market breaks the downtrend. But then you have that retest. Maybe it doesn't get all the way back to the line, but it does come back to at least test that area before we start to work our way into the next downtrend, the slightly slower downtrend, and then break again. This is the fast acceleration, and then you've got the longer, slower grind. You can see it happened last cycle and the cycle before that. There's the fast decline, and then this is the longer, slower grind. Even though they look quite similar there, you've also got this long, slow grind into the accumulation period before it took off. So recap, trap, whether it's that way, whether it's that way, I think that's a trap. Then we get the retest and see what the market does from that point. We're still a little way off from that, but eventually we'll move there. So the total market cap is really starting to get towards this again. You can see the breaks. Maybe we're going to go on that path. We break this downtrend and finally sit on top of it because we tried once and fell beneath it again. It just wasn't ready. Or we have to reposition this to the top of that bar and then run our way all the way up to the downtrend, get rejected, and then try and break it. So that's the total market, cryptocurrency market caps. In terms of the short-term BTC, I'm on the daily chart here. The short-term, now going just to the micro quickly because it doesn't mean we're going to go straight to those targets. So I just want to do a quick reminder here. The lows that are trying to hold the market up are 22,600. You can see they're overlapped here because there are quite a few price classes coming in there. So 22,600, 22,700. It looks like on at least a 4 hour that we are trying to break down from this point here. So the top has come in. Remember, we've looked at those signals many times before. High volume, peak, underside of the resistance. I think I'll cover this in tomorrow's video. It's something that we've looked at as the market has tried to come up, and that's the other short-term trap as well. You know, the market comes up, peaks, comes back under, lower top, underneath the resistance, and then you're starting to see some of the volume pick up on the down bar. So that's basically the trap there. So not much has really happened here because we've just been churning for the last several bars. Market's waiting to see whether it can hold 22.5, 22.6 or get back above 23.7. Let's revisit the short term tomorrow. Today was about the macro term trap and the wall of worry. So basically, yes, broadly speaking, market's looking like we are going up into that 2026 move. Short term, yes, there could be a trap as we first break that downtrend, as people rush into the market thinking, damn, I've missed out. And then the market sentiment basically turns us back, test the top, and move again. Guys, thanks again for joining. Like, share, subscribe if you haven't already. And of course, hopefully I'll see you in Greece on Sunday. Link is in the video description if you want to join us to chat about crypto, real estate, Bitcoin, and basically go through a bit of a talk about these cycles coming up. Don't forget the other channel sponsors, Bybit, link in the description, up over $4,000 of sign-up bonuses. And join us on Monday for our weekly live group call if you want to become a TIA member. All links are down below. Let me know where you are listening to this from. If you're at work, what do you do for work? That's been an interesting one. A quarter of you listen to these things from work. The rest of you are either pooping or eating. Till next time, peace out.